welcome to Raju Rao Accounts. Today, let's take in this class regarding final accounts. See, in this particular topic, final accounts here, basically we should be able to know every businessman after some particular period of running his particular business, he wants to ascertain whether he has made a profit or loss in his business and what is the financial position of the business. So, in order to know about his business there, what he should do here is all his particular accounting books, whatever he prepares it, okay, all the ledger accounts, whatever he prepares it, all those ledger accounts he will balance it. With the help of those particular balances, as we have already discussed, he will be preparing a trial balance to ascertain the arithmetic accuracy of the books there. Then after that, with the help of the trial balances in the ledger balance in the trial balance and with some adjustments there, he will be preparing final accounts there. Okay, these final accounts basically consist of one particularly for a trading concern, if you observe, a trading account, one profit and loss account and one balance sheet. Okay, this trading and profit and loss account is also called as the income statement, whereas balance sheet is also called as the position statement. Because you see, by preparing trading and profit and loss account, he will be ascertaining the profit or loss made. By preparing the balance sheet, one will be ascertaining the financial position of the business as on one particular date. So, in this particular class, let's discuss how to prepare this particular trading account, what should be the purpose, what is the purpose behind preparing trading account, what will be there in the trading account, then again profit and loss and balance sheet. So let us discuss this particular one. See, when we say the profit, in other words, to ascertain the profit and loss account, he will be preparing a trading and profit and loss account. Okay. Some people, they will be preparing separate trading account, separate profit and loss account, or you can prepare like this, trading account and a continuation of that you can take up a profit and loss account. So if you take this particular trading account, what is the purpose behind preparing this trading account? See, this trading account and profit and loss account, they are basically accounts there, they are not the statements there. So compulsorily, when we say an account there, it should have the accounts formalities. In other words, one debit side should be there, one credit side should be there. Of course, here these are prepared at the end of one particular period there. So here we will not have much importance about the date there, as well as that particular LF, journal folio column. Okay. So simply here, particulars amount columns will be drawing it. And the heading will be writing trading and profit and loss account for the year ending or for the period ending. Okay, what is the period ending on which you are preparing it? The date you are going to write it here. So this is the debit side, you will represent it as DR. This is the credit side, you will represent it as CR. Now coming to this trading account, this half we are calling it as a trading account. Okay, so trading account basically what part is being prepared means simply to ascertain what is the outcome of the trading activity taken up by the businessman. Okay, in other words here, simply by purchasing the goods and again by selling them, what profit is being ascertained. So all those particular direct expenses which are associated with that of the trading and a direct income which are associated with it, they are represented here in this particular trading account. If you basically observe here, all expenses which are directly related with that of the trading activity only. Okay, in other words here when we say direct expense, you should be able to know direct expenses are those which will go directly into that particular activity. Okay, in other words in the particular trading activity. Whereas indirect expenses are those which will go indirectly in that particular one. Okay, so simply here you observe that in profit and loss account, we will be taking, in trading account, we will be taking up all direct expenses on debit side and direct incomes we are taking it on credit side. Basically here whatever we are writing it, they relates with that of our trading activity only. So what are they observed here? Two opening stock on debit side, what items are there? Basically when you are doing the final accounts there, you should be able to know the meaning of each term whatever you are writing it. So I am in a brief way I am explaining this. Okay, observe this particular one. So to opening stock, when we say this is nothing but value of the stock. Stock means amount of goods left over at a particular point of time in the business is called as a stock. Opening stock, when you say stock of goods in the beginning of the year. Okay, stock of the goods which are there in the business in the beginning of the year. They are nothing but opening stock. So this opening stock we will take upon the debit side. Then again two purchases. Okay, two purchases means whatever money is being spent there to purchase the goods there, they are purchases here. Okay, so here this purchase consists of only cash purchases as well as credit purchase of goods only. Okay, purchase of assets, those things will not be there here. So simply the ledger account balance of purchase account what we prepare in our ledger account, that we will be taking up here. So purchases. So it includes both cash and credit purchase of goods only. Then again from this less purchase return. So in other words, these are the returns of those particular goods which have been purchased, which are returned back due to some reason or the other. So purchase returns account balance will be taking up. So from the purchase, if you deduct this one, this is called as adjusted purchases or net purchases. Then again to carriage inwards. Carriage inwards means to carry those particular goods, okay, to your particular place of business there. Whatever expenses you have incurred, they are called as carriage inwards, direct expenses. Then again to freight. Okay, freight is nothing but the charges incurred for transportation, you can say. Then again duty. Okay, these are the taxes paid while the goods are being imported from the foreign country. Then similarly octroi. These are the direct expenses incurred for selling the goods in the municipal limits there. Whatever tax is paid to the municipality is the direct expenditure. Octroi. Okay, so these are direct expenditure, as such we are debiting it here. Then again to manufacturing wages. Wages are paid to casual labor. So the manufacturing wages whatever are incurred, they are direct expenses which we are going to debit it here. Then again to factory rent, lighting, etc. Anything relating to the factory, wherein in the factory a bit of production will take place. So any expenditure relating to factory are all direct expenses, just like factory rent, factory lighting. Then again factory, any other expenditure, lighting we can say, rent you can say, all these are direct expenses. Anything relating to the factory you will be debiting to your trading account only. Then again to motive power. Okay, in other words here power which you have used for taking up some particular production there. Then again to coal, gas, water. Okay, you know the meaning of coal, gas, water, whatever is being consumed in the production there, a bit of production there. Then again to factory lighting. Okay, so like this, these are all direct expenses which are associated with the top the trading activity taken up in the business there. Similarly, the incomes what you get out of trading activity is nothing but the sales. Okay, sales are nothing but, you people are aware what is the meaning of a sales. Sales are nothing but here sale of goods only here. When we say sales here, sale of goods only. That means here both cash sale as well as credit sale of goods only will be represented here in this sales there. Sale of any particular asset will not be represented, because you see sales account when you prepare it, in that one only sale of goods only will be taken up there. Then again less sales return. That means if these goods which have been purchased, if they have been returned back by that particular customer there to you, okay, which you have sold previously, if they are returned back to you, they are sales returns to you, so that you will be deducting from this, so that you will get the net sales there. Then again buy closing stock. Okay, closing stock is nothing but opposite of opening stock. Closing stock means stock of the goods left over at the end of the year, they are closing stock. Then again buy abnormal loss of stock. That means if there is any particular loss, okay, abnormal loss is nothing but a loss which would have been prevented, okay, if proper care had been taken. Okay, such type of losses incurred. Loss of stock, abnormal loss of stock, you will be getting it here with the total value of the loss according to your books there. So if you balance this particular one, basically the difference, if you come get it here, we will call it as a gross profit. If the difference comes here, it is a gross loss. Here you should understand one thing. So gross profit, if you get it, this gross profit you will transfer to your profit and loss account. So from here onwards, the continuation I have written on that side. So from here onwards, we are continuing with the profit and loss account. Okay, so here this gross profit, if you get it, that you will transfer to the other side, in other words the credit side of profit and loss account. Sometimes what happens, this debit total will be more, whereas the difference will come here. It might be gross loss. So if the difference comes here on the credit side, it is a gross loss. So at that time also you write by gross loss carried down, that gross loss you are going to debit it to your profit and loss account. So here normally you will get gross profit, so you will be transferring to profit and loss account. See, then after that in profit and loss account, what we will take up? We will take up all indirect expenses and indirect incomes in profit and loss account. Okay. See, any expenses relating to the office and administration, selling and distribution, okay, all those are indirect expenses which are incurred there. So normally to run the business there, these are those particular expenses which are incurred, but which are not directly related with the top your particular trading activity. So these are all direct expenses, these are indirect expenses. Okay. So further going into this particular profit and loss account, let's understand this particular trading account a bit. Let's once again discuss regarding this particular one. See, normally gross profit formula, if somebody asks, you should say gross profit is nothing but sales minus cost of goods sold. Okay, gross profit is equal to sales minus cost of goods sold. Okay, what is the meaning of cost of goods sold? Cost of goods sold means, see this particular one clearly, you will be understanding. Cost of goods sold is equal to opening stock plus purchases plus direct expenses less closing stock. Okay, that means opening stock plus purchases plus direct expenses means all expenses which are debited here. Less closing stock, if you do it, you will get cost of goods sold. Okay, then sales minus cost of goods sold, if you do, you will get gross profit. So that is the equation to ascertain the gross profit. gross profit is equal to sales minus cost of goods sold. Cost of goods sold is equal to opening stock plus purchases plus all direct expenses less clothing stock. This is the formula you should remember regarding clothing stock. Cost of goods sold. Okay, sometimes in short problems he may ask, ascertain the cost of goods sold. So cost of goods sold is nothing but formula you should remember, opening stock plus purchases plus direct expenses less clothing stock is my cost of goods sold. Okay, that is the formula. So gross profit is equal to sales minus cost of goods sold. That formula also you can remember. Now coming to profit and loss account here. So this gross profit you have transferred to the credit side of profit and loss account. Now in the profit and loss account on debit side we are going to take up all indirect expenses. On credit side we are going to take up all indirect incomes there. Indirect incomes, when we say those incomes are generated while running the business there, but they are not out of your particular trading activity. The meaning is that one. Okay, out of your particularly related with that of the trading there, whatever income you generated, you have credited it here. The other incomes which you generate while running the business, that those are all indirect incomes there. Observe here, indirect expenses, salaries. So what are salaries here? Salaries means here, salaries paid to the permanent staff. Remuneration paid to the permanent staff is salary. Okay, remuneration paid to the casual labor, they are called as wages. Okay, so wages are direct expenses, salaries are indirect expenses. So sometimes to confuse you, what he says, wages and salaries if he has given, wages or wages and salaries if he has given, wages and salaries. Wages and salaries he has given, first we got wages. So wages and salaries is a direct expenditure. If he says salaries and wages, if he said, it is an indirect expense. So salaries and wages if he has given, you debit to profit and loss account. Or simply salaries if he said, debit to profit and loss account. Then again to rent, rates and taxes. What are these rent, rates and taxes? Rent paid for office building. Rates are municipal taxes paid. Okay, and other related taxes there, whatever are there. These are indirect expenses. Then again lighting of office building. Okay, this is nothing but indirect expenditure. Lighting of factory if it is there, that you will debit to your trading account. Now coming to your profit and loss account debit side, then we are having two, printing and stationery. These are the expenses incurred for printing and stationery which is used in the business. Then indirect expenditure. Then postage and telephone. These are the expenses incurred for postal charges there, whatever are being incurred to run the business there. Telephone charges, whatever are incurred, they are all expenses or indirect expenses. Then legal expenses. Okay, legal expenses are nothing but because of some legal cases or something like that, some expenses might have been incurred legally for taking up the legal procedures there. So they are called as legal expenses. Okay. Then similarly, because for every business, various types of statutories are applicable there. Based upon that, some returns have to be submitted to some department, something like that. So at the time, whatever expenses are incurred, they all come under legal expenses. Then audit fees. Fees paid to the auditors. It is called as audit fees. Auditors are the people who are going to verify, in other words, they are going to check each and every transaction in your books, and they are going to ascertain, saying that what is the position, whether the books of accounts are projecting a true and a fair view. They are the people who are going to give their particular certificate at the end of the auditing. Okay, so for those auditors, whatever fees is paid, it is called as audit fees, as an expense to the business, indirect expense. Then general expenses. General expenses means other expenses, whatever petty expenses are incurred in the business there to run it. All those comes under general expenses. Then advertisement expenses, expenses incurred for advertisement. You are aware about advertisement there. So businessman, when he gives advertisement, he will be incurring expenses. Those are all indirect expenses. Then travelers' salaries. Travelers' salaries means salaries paid to the travelers. Travelers are the people who will be moving from place to place to sell the goods there. So to them, whatever salaries are being paid, they are indirect expenses there. Then again, packing expenses. Packing expenses, you are aware. Okay, goods when they have been, so when we are selling the goods there, they need to be packed there. So for packing, whatever expenses are incurred, packing expenses, indirect expenses. Bad debts. Okay, observe this bad debt. Bad debt, what is it? Bad debt is purely a loss. Okay, debt means amount due from the debtor is a debt. If the debt becomes irrecoverable, we will call it as a bad debt. Okay, bad debt will be written off from the books there. It will be cancelled from the books by debiting to profit and loss account because it is a loss. Bad debt. Then again, depreciation. Okay, you people are aware about depreciation. It is a gradual and a continuous decrease in the value of assets as the time passes on. There is a loss, or sorry, expense we can say. So depreciation. Then again, repairs and renewals. Expenses incurred for repairing our assets there. Renewals, for renewing some particular licenses there. Whatever expenses are incurred, those are indirect expenses. Then again, discount allowed. Okay, when we pay, in other words, when the customers makes prompt payment, you will be allowing them some particular discount there. When your debtors makes prompt payment to you, at that time or beforehand, if they make payment to you before the due date, at that time, in other words, those particular debtors will be given some particular discount by the businessman. It is an expense to him, so it is a discount allowed, indirect expense. Then carriage outwards. See, this is the opposite of carriage inwards. Carriage inwards is the expenses incurred to bring the goods to your particular place of business there to sell it. Whereas carriage is a direct expense. Carriage outwards means when the goods are being sold. If the goods are being sold at that time, the goods are delivered at the place of the particular customer. Okay, those charges are also borne by the businessman. At that time, they are carried outwards. They are indirect expenses. Then again, interest on loan. Okay, interest on loan. That means if the business has taken a loan, loan is a liability. On that particular loan, interest has to be paid by the business to the bank or to the financial institution from where he has taken that particular loan there. So interest on loan is an indirect expense to the business. Then again, interest on capital. Observe this, how nice he has given. Capital is the money borrowed by the business from the proprietor. Okay, because business is separate, owner is separate. Okay, proprietor is different from that of the business there. At that time, whatever proprietor has contributed as capital to the business, it is a liability to the business. Capital is a liability. Okay, on that capital, business is allowing him some particular interest there. So it is called as interest on capital. So from business point of view, interest on capital is an expense. Then again, loss by fire. Okay, in the business, due to some fire accident, there some loss has occurred, or due to theft, some loss has occurred. Those losses we are going to debit it. Then again, to charity. Okay, in other words, here, whatever amount is donated by way of charity. Okay, that also is an expense here. We are debiting it here. So simply, basically, any items, whatever it comes there when you are doing the final account, observe it carefully. Okay, you should be able to get the meaning of that particular one, what it is. Is it a direct expense or indirect expense? If it is direct expense, you are going to debit it here. If it is indirect expense, debit to profit and loss account. Coming to the credit side of your profit and loss account, what we are having, see, this gross profit you have taken up here. Then again, by interest received. Okay, if interest is allowed there, it is an expense. We will debit to profit and loss account. If it is interest received, okay, in other words, our business has received the interest, so it is an income, indirect income, which is not associated with that of the trading activity, but it has that income is earned. So it is indirect income. We are crediting it here. Then again, discount received. Similarly, when to the debtors, when we are allowing the discount, similarly when we are making payment to the creditors, discount might be received by the business there. So that particular discount received is an income. We are crediting it here. Then again, to rent, by rent received. Okay, rent received, rent paid is an expenditure. Okay, we will be debiting it to the profit and loss account. Rent received is an income. Miscellaneous receipts. Simple concept here in accounts there. Just like if you come across interest, it is an expense to you. Rent, it is an expense to you. Okay, discount, it is an expense to you. If it is an income, he will say rent received, discount received, interest received. Okay, there is the only clue to us. Okay, so simply here you can understand here. Receipts are all incomes here. Expenses we are debiting it here. So ultimately, when you balance this profit and loss account, if the difference comes on the debit side, it is a net profit. Okay, when you balance this, if credit side total is more, and if the difference you are getting here on the debit side, then it is a net profit. This net profit we will transfer to the balance sheet. Okay, in the balance sheet to the capital, we are going to add if it is a net profit. Sometimes what happens, debit side of profit and loss account will be more, whereas credit side will get the difference here. It is a net loss. If it is a net loss, what we are going to do, we are going to subtract from the capital in the balance sheet. Okay, so these things you should remember. See, after trading in profit and loss account, then in the final accounts we will be preparing the balance sheet. So balance sheet is something like this. See, this balance sheet, it is not an account there, it is a statement there. So it will have two sides, one left hand side, one right hand side. Left hand side represents the liabilities, right hand side represents the assets of the business. Okay, so here since it is not an account, we will not have debit and credits there. So no, you should not write that for debit and credit. Now balance sheet is prepared as on one specific date. So as such you will write balance sheet of, okay, whoever that businessman is there, his name as on one particular date we are going to write it. It is prepared as on one specific date. So observe here the liabilities, what are there. See, while preparing the balance sheet, how these particular items, the assets and liabilities, we should write it. Okay, there is nothing but how these assets and liabilities should be grouped. It is called as a marshalling of these particular items there. So there are two different methods in which we can prepare this particular balance sheet. In other words, here how we should write these particular assets and liabilities, in which order we should write. See, this particular one which I have written here on the board there, this is based upon the one particular method called as on the basis of permanency. In other words, here how permanent these particular assets and liabilities are there, based upon that we have prepared it. So one particular method you can follow. So in this particular method you observe what he has given. Say, see here, those assets which are mostly permanent in the business there, those we are writing it first. Then again whatever current items are there, we are writing it afterwards. Okay. Now what is current, what is permanent? Let's see here. See, assets side if you observe there, first we are taking up all fixed assets there. Okay. Fixed assets are those assets which are used in the business for a longer period. They are not held with the intention to sell it again. Okay. With the help of these assets we want to generate some revenue. These fixed assets again are classified into tangible and intangible. So those assets we are taking up here, you can observe. Tangible assets are those assets which can be seen with our naked eye. Intangible assets are those which cannot be seen with our naked eye. Okay, simply observe here, furniture and fixtures. Okay, in our ledger accounts, whatever furniture and fixtures account balance is there, that you are going to show it here. It is a fixed asset, tangible asset, fixed asset. Then land and buildings. Okay, land and buildings. Once again, it is a tangible asset, it is a fixed asset, tangible asset it is. Then plant and machinery. Okay, this is nothing but the value of plant and machinery which is there in the business. Plant does not mean our natural plant. Plant means here any particular big structure erected, we will call it as a plant here. So plant and machinery, it is a tangible asset, we are writing it here. Then again observe patents and trademarks. Okay, patents and trademarks, these are nothing but here, these are intangible assets there. Okay, that balance you are going to write it here. Then goodwill. Goodwill is another intangible asset. Okay, see, simply goodwill is a good name acquired by a business. It is the extra earning capacity of one business when compared to the top other businesses. So goodwill, we will show it here. Then again loose tools. Okay, these loose tools is nothing but they also comes under tangible assets only. These assets which can be seen with our eye there, loose tools. Okay, these are all small tools which are used in the business there, just like hammers, spanners, such type of items will come. So they are our assets there. Then again motor vehicles. Okay, there is no need to explain regarding motor vehicles. They are fixed assets, tangible assets. Then again investments. Investments means our business capital. Instead of investing in our business, if we have invested in outside businesses, they are our investments. They are our assets there. Okay. Then again, see, from here onwards, they are all current items here. Current means here, these are those particular assets which can be converted into cash within 1 year period. They are called as current assets. Okay. What are those other prepaid expenses? Expenses paid in advance. Okay, how much we will pay? We will pay for 1 year at the most. Okay, so prepaid expense is a here current asset. Then closing stock of goods left over at the end of the year. Okay, this stock of goods will not be retained in the business. They are held in the business again to sell it. Okay, goods are the items which are held in the business with the intention to sell it there. So stock of those goods we are calling it as a stock. Okay, amount of goods which are left over. At the end of the year, at the end of the period, it is a closing stock. So it is a current asset. Then again, sundry debtors. Sundry means sum of. Debtors are the people who are nothing but they are our customers of our business. These are the people who will be purchasing from us on credit there. They owe money to our business. So debtors owes money to our business. So they are our assets there. Okay, Ronagrastulu. Then again, bills receivables. Bills receivables are nothing but these are those bills on which we should receive the money. We are about to receive the money. Okay, they are the monies which we should receive. They are our assets there. So these are also current assets. Sundry debtors is a current asset. Clothing stock is a current asset. Prepaid expenses are current assets. Similarly, observe here outstanding incomes. Outstanding incomes are nothing but these are incomes receivable. Okay, incomes receivable but not yet received. Just like commission receivable, rent receivable, interest receivable. Receivable is different, received is different. Received is already received, it is an income. You will write on income side in the profit and loss account. There is nothing but credit side. Here this is receivable. So it is our some money which is receivable towards that. It is our asset, current asset. Then again cash in hand, of course, cash which is there in the hand in the business. Then cash at bank. It is nothing but amount of the business which is there in the bank account. So like this we will specify these particular accounts there. So simply here you should be able to know, first we will be writing up all the fixed assets, then again current assets here. Okay, any item whatever it comes to you, first of all you identify it, what it is, what is its particular meaning, then with clarity, you people only will get an idea where to write the particular item. It is very, very simple here. Okay, coming to the liability side, you observe, first we will be taking up capital. Okay, you are aware what is the meaning of a capital. It is the amount invested by the money or money's worth invested by the proprietor in the business while commencing a business is a capital. So that particular capital balance, capital account balance we are taking up here. Then again, whatever net profit we got in our profit and loss account, we are going to add it to this particular net profit. If we get a profit, we are going to add it. If we get a loss in the profit and loss account, we will deduct from this particular capital. Then again, add interest on capital. Okay, interest on capital, if it is there, if it is payable, then we are going to add it here. Interest on capital, we are going to add to the capital. Then again, less drawings. Drawings are nothing but money is drawn by the proprietor. Money or money is worth drawn by the proprietor for personal use, for himself or for his family members. They are drawings. So the drawings we will deduct it from the capital. So we are taking it in the column here, drawings. Then again, if interest on drawings is there, that also will add to this one. Both put it together, we will deduct it from, this is the less, we will deduct it from the capital. Ultimately, this is the capital at the end of the year, which we are writing into the outer column. Then again, reserves. Okay, reserves are nothing but these are appropriations of the profits. Reserves means here, after getting the net profit, a part of the profit is retained in the business there for some specific purpose or for some future use there. That we will call it as the reserves. Okay, so whatever reserves are there, just like general reserve is there. Okay, dividend equalization reserve is there. So like this, there are many other reserves are there. So whatever reserve comes there, those reserves we are going to take up here. Then again, bank loan. Okay, bank loan means here the loan taken by this particular business from the bank. Okay, it is a liability. We are writing it here. Then again, loan on mortgage. It is in addition to this. Loan on mortgage means you have taken a loan by mortgaging some of your particular assets there. By showing your assets as security, you have taken a loan. They are mortgage loan. It is a liability. Then sundry creditors. See, up to this, more or less, their period is more. In the longer duration, they will retain in the business there. But these are all current liabilities. Current liabilities means liabilities which have to be met within a period of 12 months there. In the coming 12 months, you are supposed to pay it. What are those? Sundry creditors. Creditors are the people to whom our business owes money. Sundry means the sum of the creditors. Okay, just like sundry debtors are there here, sundry creditors. These are the monies which our business is supposed to pay to outsiders. It is a current liability. Then bills payable. Okay, these are the bills on which our business is supposed to pay the money. Then again, outstanding expenses. Okay, outstanding expenses means expenses due but not yet paid. Just like outstanding salary, if you say. Okay, salary means salary paid. Outstanding salary means salaries you are supposed to pay but you have not yet paid for the current year. Okay, so they are your liability. All those we are calling it as outstanding expenses. Expenses due but not yet paid. Then again, interest received in advance, income received in advance. Simple concept you should understand there. If you have received any money in advance, okay, it is a liability to us. If you have paid any expense in advance, then at the time it is an asset to us. Just like next year's income, if you have received now only, till next year comes, it is a liability to us. Just like income received in advance. Take for example, next year's expenditure, if you have paid now only, that means till next year comes there, it is your asset there. You are present on asset side. So simply think of, if you think more regarding each item what you are writing, it is very, very simple there. See, in a brief manner, I have explained trading profit and loss balance sheet to you, and in the next period there, okay, in other words, in my next video, tomorrow I will be uploading that one. In my next video, I will be explaining all the adjustments there. So if you are perfect with the adjustments as well as this particular format, doing the problems is very, very easy. So every day we will have one particular video on this particular topic till your examination period, so that it will be easy to you. Okay, please do share my video. Okay, do subscribe it.